navigating the world of mortgages can be a daunting task. Whether you're a first-time homebuyer or an experienced investor, understanding how mortgages work in Dubai is crucial to making informed decisions. In this video, we'll take you through the ins and outs of mortgages in Dubai, from the basic concepts to the intricate details. Stick around to the end, because we'll also be sharing tips to help you secure the best mortgage deal for your needs. Let's get started. First things first, what exactly is a mortgage? A mortgage is essentially a loan given by a lender, usually a bank, to help you purchase property. In Dubai, just like in many other parts of the world, the property itself serves as collateral for the loan. This means the lender holds a legal claim to the property until the loan is fully repaid. In the event that you are unable to make your mortgage payments, the lender has the right to repossess the property to recover the outstanding amount. This underscores the importance of fully understanding the terms and conditions of any mortgage agreement you enter into. Mortgages in Dubai are typically available through a variety of channels, including local and international banks, mortgage brokers, and specialized financial institutions. While the basic principles of a mortgage are the same everywhere, the specifics can vary widely depending on the lender and the type of mortgage you choose. Now that we've covered the basics, let's explore the different types of mortgages available in Dubai. Understanding these options will help you choose the right mortgage for your financial situation and long-term goals. The two primary types of mortgages in Dubai are fixed-rate and variable-rate mortgages. A fixed-rate mortgage offers you the security of knowing that your interest rate, and, by extension, your monthly payments, will remain the same for a specified period, typically ranging from 1 to 5 years. This stability can be particularly appealing if you're budgeting for the long term or prefer predictable expenses. On the flip side, a variable-rate mortgage, also known as a floating-rate mortgage, offers a potentially lower initial interest rate. However, this rate can fluctuate based on changes in the broader financial market, which means your payments could increase or decrease over time. This option might be attractive if you anticipate that interest rates will fall in the future, or if you're comfortable with some degree of financial risk. In Dubai, many banks offer hybrid mortgages as well, which combine elements of both fixed and variable rate mortgages. For example, you might start with a fixed rate for the first few years of your mortgage, after which the rate could switch to a variable one. This hybrid approach can offer the best of both worlds, providing initial stability with the potential for savings later on. Choosing between these types of mortgages depends largely on your financial situation, your expectations for future interest rates, and your tolerance for risk. It's crucial to carefully consider each option and consult with a financial advisor or mortgage specialist if needed. Before you can secure a mortgage in Dubai, you'll need to meet certain eligibility criteria. These requirements vary from lender to lender, but they generally revolve around your financial stability, employment status, and the property in question. Let's start with age. Most lenders in Dubai require that you be at least 21 years old to apply for a mortgage. Some lenders may have an upper age limit, often around 65 to 70 years, by the time the mortgage term ends. This means that if you're applying later in life, you may be required to opt for a shorter loan tenure. Income is another critical factor. For expatriates, the minimum required monthly salary usually starts at around 15,000 Emirati dirhams, although this figure can be higher depending on the lender and the type of property you're purchasing. Lenders will typically assess your income to ensure that you can comfortably meet your mortgage payments along with any other financial obligations you may have. Your employment status also plays a significant role. Lenders prefer applicants who have a stable job with a reputable company. Self-employed individuals can also qualify for mortgages, but they may need to provide additional documentation, such as audited financial statements and bank records, to prove their income stability. Another key consideration is your credit history. A good credit score can significantly improve your chances of securing a favorable mortgage rate. In Dubai, lenders will typically check your credit report to assess your financial discipline and reliability. If you have outstanding debts or a history of missed payments, this could impact your mortgage approval. Finally, the value of the property you're looking to buy will also affect your eligibility. Lenders often require a down payment, which is a percentage of the property's value. For expatriates, this down payment usually starts at 20% for properties valued under 5 million Emirati dirhams and can go up to 30% for more expensive properties. UAE nationals may enjoy slightly lower down payment requirements, reflecting the government's efforts to promote homeownership among citizens. Meeting these eligibility criteria is essential, but keep in mind that different lenders have different requirements. It's a good idea to consult with multiple lenders or a mortgage broker to find the best match for your financial profile. Now that you know the types of mortgages and the eligibility criteria, let's walk through the mortgage process itself. Getting a mortgage in Dubai is a multi-step journey, but with careful planning, you can navigate it successfully. The first step in the mortgage process is obtaining pre-approval. This involves submitting your financial details, such as income, employment status, and existing debts, to a lender, who will assess your creditworthiness and determine how much they are willing to lend you. Pre-approval is not only a great way to understand your budget, but it also signals to sellers that you're a serious buyer, which can give you a competitive edge in the market. It's worth noting that pre-approval typically comes with an expiration date, usually 60 to 90 days, so you'll want to time your property search accordingly. With pre-approval in hand, the next step is to find your ideal property. Whether you're looking for a high-rise apartment in the heart of the city or a serene villa by the beach, Dubai offers a wide range of real estate options. Working with a reputable real estate agent can help you navigate the market and find properties that meet your criteria. When selecting a property, consider factors such as location, proximity to schools and workplaces, and future resale value. Remember, the property you choose will be your home and a significant financial investment. Once you've found your dream property, the next step is to formally apply for a mortgage. This involves submitting a detailed application along with the necessary documents, such as the property's title deed, the sales agreement, and a valuation report from an approved surveyor. The lender will use this information to conduct a thorough evaluation of the property and your financial situation. This step is crucial because it ensures that the property is worth the amount you're borrowing and that you can afford the mortgage payments. After reviewing your application, the lender will issue an offer letter, also known as a mortgage offer. This document outlines the terms and conditions of the mortgage, including the interest rate, loan tenure, monthly payments, and any applicable fees. It's important to carefully review this letter and understand all the terms before signing. Don't hesitate to ask questions or seek clarification from your lender if anything is unclear. Remember, this is a long-term financial commitment, so it's essential that you fully understand the agreement. Before the mortgage is finalized, the lender will conduct a property valuation to ensure that the loan amount aligns with the property's market value. This step is particularly important for the lender, as it reduces their risk by confirming that the property is worth the investment. In addition to the valuation, the lender will also perform legal checks to ensure that the property is free of any encumbrances, such as unpaid debts or legal disputes. These checks help protect both you and the lender from potential legal issues down the road. Once the valuation and legal checks are complete, you'll move on to the final step, signing the mortgage agreement and the sales contract. At this point, the lender will disperse the loan amount to the seller, and you'll officially become the property owner. It's an exciting moment, but also one that comes with the responsibility of managing your mortgage payments and maintaining the property. While the mortgage process might seem straightforward, there are several key considerations and costs that you need to be aware of. Let's take a closer look at some of these. One of the most significant factors to consider is the interest rate on your mortgage. Even a small difference in the interest rate can have a substantial impact on the total cost of your loan over time. That's why it's crucial to compare rates from different lenders and choose the one that offers the best terms for your situation. In addition to the interest rate, you'll also need to factor in other costs, such as property registration fees, which are usually around 4% of the property's value, and valuation fees, which can range from 2,500 Emirati dirhams to 3,000 Emirati dirhams. There are also mortgage processing fees, which can be up to 1% of the loan amount. These costs can add up quickly, so it's important to budget for them in advance. It's also essential to be aware of any penalties for early repayment or late payments. Some mortgages in Dubai come with hefty fees if you decide to pay off your loan early, which can be a significant financial burden if you're not prepared for it. Similarly, late payment penalties can add up, so make sure to stay on top of your payment schedule. If you're already a homeowner with a mortgage, refinancing might be an option worth considering. Refinancing allows you to replace your current mortgage with a new one, ideally with better terms, such as a lower interest rate or a different repayment structure. Refinancing can be an excellent way to reduce your monthly payments or to switch from a variable rate mortgage to a fixed rate one if you prefer more stability. However, it's important to carefully weigh the costs involved, including any early repayment penalties on your existing mortgage and processing fees for the new one. To make the most of refinancing, it's crucial to time it right, usually when interest rates are lower than when you originally took out your mortgage. Consulting with a mortgage advisor can help you determine whether refinancing is the best option for you. Choosing the right mortgage is one of the most important financial decisions you'll make, so here are a few tips to help you make the best choice. Different lenders offer different interest rates, fees, and terms. Don't just settle for the first offer you receive. Shop around and compare options. Even a slight difference in interest rates can save you thousands of dirhams over the life of your mortgage. When choosing a mortgage, think about how it fits into your long-term financial plan. Are you planning to stay in Dubai for the foreseeable future, or do you see this property as a short-term investment? Your goals will help determine whether a fixed-rate or variable-rate mortgage is the best fit. If you're unsure about any aspect of the mortgage process, don't hesitate to seek advice from a financial advisor or mortgage broker. They can provide valuable insights and help you navigate the complexities of the market. A mortgage is a long-term commitment, and getting the right advice can make all the difference. Whether you're a first-time buyer or looking to refinance, taking the time to understand your options will pay off in the long run. Owning a home in Dubai is a dream for many, but it's also a significant financial commitment. By understanding the mortgage process, comparing your options, and seeking professional advice, you can make informed decisions that align with your financial goals. Thank you for watching, and I hope you found this guide helpful. If you did, don't forget to like this video, subscribe to our channel, and hit the notification bell so you never miss out on our latest content. Also, feel free to check out our other videos on real estate, finance, and more. Until next time, happy house hunting!